Hi everyone, this is Alan Rosinski of Metro Manhattan Office Space. Good afternoon. 2021 has been another difficult year for New Yorkers and everyone else in the world for that matter. There is some anxiety about what's in store for 2022, and it's difficult to provide any clarity. Border restrictions are tightening thanks to fears of the Omicron virus variant, and many New York City businesses, especially those that are tourism related, are rightfully worried. So what can we expect in 2022 realistically? One of the perks of working in commercial real estate is that I get to interact with business owners and professionals in all walks of life, both local and international, who share their thoughts on where the world is headed. The local commercial real estate sector is a proxy for the economic health of New York City. What I and my friends in the industry see correlates with the overall health of the city. In this video, I will try to summarize a few of the trends that I have been observing. First, I think that it's important to counter some of the fear-mongering from mainstream media. It's important to note that many industries have done very well. 2021 has shown us that businesses are more than capable of recalibrating and that many sectors can prosper despite people's fears. The national housing market has seen its largest gains in history, rising by 18.5% year over year. This is great news for homeowners, but not so great news for new home buyers. However, builders, tradespeople, or brokers have had an extremely profitable 2021. Some would say that we're approaching real estate bubble territory. While it's possible that residential real estate prices might cool off, many experts predict price increases for at least another year. In New York City, apartment rental prices and occupancy rates have bounced back. Cooperative and condominium prices after an initial 2020 pandemic drop have climbed back in 2021, though still greatly trailing the national market. Moving on from real estate, the medical and biotechnology industry is another example of a market that has benefited tremendously from the pandemic. Many medical startups have done very well for themselves and have had countless new opportunities, whether it's improving senior care, manufacturing wearable technology and home diagnostic tools, performing rapid testing, creating new apps and communication systems, and many other related services. The silver lining to the pandemic is that it has given the United States and other countries new opportunities within the healthcare and medical space. The knowledge and experience gained from all these products and services will result in new medical innovations in the future, which will be to the benefit of everyone. On that note, landlords have been leasing more space to non-traditional tenants, such as those involved with life sciences and the broader healthcare industry. Incidentally, one of the tenants who I've represented this year was MicrobeTV, which publishes content exploring virology. Their YouTube channel has over 100,000 subscribers. The channel has experienced explosive growth since the start of the pandemic. MicrobeTV is owned and operated by prominent academics and physicians affiliated with Columbia University. Another example of a life science tenant is Philogen, a COVID testing lab which opened an environmental testing facility at 65 Broadway this autumn. The firm provides environmental testing for white-glove Class A buildings in the World Trade Center complex. My firm represented Philogen as well and is currently representing other life science tenants. Now, let's talk about other industries. Online shopping giants such as Amazon have seen record increases in their business, with Amazon stock nearly doubling since the beginning of the pandemic. Between January and October of 2020, Amazon added almost 500,000 new employees, and the trend has only continued. There has been no drop in demand for online shopping, and this appears to be a permanent shift in people's shopping habits. Companies that have traditionally sold their goods in person now have to compete online, which even includes various luxury retailers. This is good news for internet commerce companies like Shopify that provide online storefront systems. Shopify, which is based in Canada, has seen its stock price quadruple since the start of the pandemic. Another sector that has benefited from a full transition to online ordering includes restaurants and dining establishments that we all enjoy. While many fast food restaurants offered delivery options even before the pandemic, quite a few upscale and specialty restaurants did not have that ability. After all, people did not typically associate fine dining with takeout and delivery. The pandemic has altered that norm, forcing all restaurants to adapt delivery options either on their own or through online services such as Uber Eats and Grubhub. As a result, restaurants that used to rely on a smaller number of physical customers will see their income increase with many new orders coming in online, in addition to renewed visits in person. Today, nearly every type of restaurant is expected to handle takeout and delivery in one way or another. There are countless other industries that are thriving thanks to the forced social restrictions that we've all had to endure. They include communication platforms such as Zoom, which has been critical for corporate as well as educational sectors, online entertainment platforms such as Netflix that added nearly 16 million subscribers in the first quarter of 2020, game companies, especially those that manufacture family-friendly board games, fitness equipment manufacturers, telehealth services, tutoring providers, and even cleaning companies that sanitize commercial environments, and the list goes on. Now let's discuss the commercial real estate industry in a bit more detail. Co-working companies like WeWork and IWG, who offer flexible office space, took a hit at the start of the pandemic. They've since stabilized as corporate demand for flex space started to grow. This could end up saving the co-working sector in the long run. Many companies have increased their share of flex space while downsizing their offices as their employees worked remotely. Not to be outdone by co-working companies, many landlords in New York City have started to convert portions of their vacancies to flex space to meet demands for shorter-term leases and flexible occupancy arrangements. This trend will very likely continue into 2022. Some buildings with an inventory of larger office spaces have partitioned those units into smaller spaces that are more easily marketable to smaller tenants. To make office spaces more attractive, larger landlords of Class A buildings have upgraded and added amenities to their buildings to attract tenants and office workers back. Examples include better food options, gyms, shared conference rooms, and bike storage. Other building work may include upgrades to elevators, lobbies, mechanical systems, improved security, windows, bathrooms, and common quarters. Prior to the pandemic, office space vacancies in the U.S. hovered at around 9%. This figure climbed to 17.2% in Q2 of this year before going down to 12.4% in Q3, which is the first decrease in vacancies since the start of the pandemic. Remote working is likely to follow this trend, with many employees returning back to their offices at some point in 2022, while a select portion will keep working remotely. The exact mix will depend on what the particular company does and the importance of an in-person collaboration to their overall success. Now, when it comes to New York City specifically, things are still up in the air. According to Civilis research, demand for Manhattan office space in Q3 of this year has started to increase, and occupancy has increased as well compared to earlier in the year. But availability is still sitting high at around 18%. It's projected that supply-demand equilibrium will not be reached for several more quarters, given the amount of space currently available. Rent prices have largely stayed the same since Q1, with only a small decrease. As I've mentioned in many of my previous videos, there is substantial value to be gained when it comes to negotiating long-term leases. This value can come in the form of free rent, build-out allowances, and other tenant concessions. In terms of lease signings, companies that have leased the most space in Q3 have been in the legal and financial sectors. I've talked about some of these transactions in one of my Deals of the Week videos. They include prominent companies such as Interpublic Group, Fried Frank, Credit Agricole, BDO USA, Daily Pay, Lowenstein Sandler, New York University, Wells Fargo, and others. Now, not all landlords will end up waiting for tenants to return. Next year, we are likely to see some commercial office buildings being sold for redevelopment into residential housing. These buildings will typically have smaller floor plates that will work well for conversion to apartments, and they would typically be located on side streets. This will remove excess supply from the marketplace and will cause rent prices to climb back up at some point in the future. There will be a more visible difference between have and have not landlords. Owners of side street Class C buildings that are heavily mortgaged and undercapitalized may have trouble repaying their loans. Some may default. This will be evident in the level of service to existing tenants and the maintenance of these buildings. Some of these properties may even be seized by the lending institution. On the other hand, well-capitalized have landlords such as SL Green and Vornado will not be affected. Generally, tenants will continue to be in the driver's seat in 2022, but the deals will not be as sweet as they were in late 2020 and early 2021 before vaccinations were prevalent. The commercial real estate market will stabilize, and commercial tenants will remain at current levels for a while longer. There's no precedent in modern history for the economic effects of a pandemic on a data-driven service economy, and businesses have had to find ways to adapt. We see this across all industries, including commercial real estate. The pandemic has taught us that businesses have the ability to adapt to the most challenging and unexpected conditions short of an apocalypse. For the most part, we are better equipped to deal with new challenges that the year 2022 is sure to bring. So I wish all of you and your families all the best in the coming year. Please feel free to let me know your thoughts about the commercial real estate market and which trends you think will have the most impact in 2022. Thank you for watching. If you found this content interesting or helpful, I'd be happy if you subscribe to my YouTube channel. You can always find me on Twitter. My Twitter handle is @MetroManhattan. Until the next time.